The crypto market is going through a moment we've never seen before. In just a few months, what used to be separate worlds is starting to come together. Regulators in the United States are softening their stance. International banks are moving billions on blockchain, and private giants like SHIB are creating tools so anyone can launch their own stablecoin. This isn't a distant idea anymore. It's becoming real. The question is, what happens when Wall Street and the crypto world stop being rivals and start playing on the same team? So what are crypto prices telling us? We're seeing massive institutional buying in Ethereum and bullish breakouts of key structures across the ecosystem. This video is going to be interesting. The global crypto and financial ecosystem is entering a new phase of transformation, and what's most striking is how aligned things are becoming. Almost at the same time, regulation in the US, adoption by traditional banking, and the rise of new infrastructure for digital commerce. Let's start with the United States, where crypto companies are seeing a surge in hiring specialized talent. For years, the lack of regulatory clarity pushed many professionals to move to places like Dubai or Singapore. But now, with the passage of the Genius Act, which sets clear rules for stablecoins, and with a more favorable agenda from the Trump administration, the trend has flipped. In fact, Ripple says that 3/4 of its open roles are already in the United States. Coinbase announced more than 1,000 hires, and tech giants like Fidelity and Charles Schwab have started opening senior positions in the crypto space. What's more, the most in-demand profiles have evolved. Companies aren't just looking for developers anymore, they're also seeking executives who can bridge traditional finance with blockchain, along with marketing professionals and strategic partnerships leaders. All of this is backed by a change in tone from regulators. SEC Chair Paul Adkins launched Project Crypto with the goal of modernizing markets and adapting them to on-chain technology. His message has been clear: only a handful of tokens should be treated as securities, a sharp turn from the rigidity of the past. The SEC is even studying whether to allow tokenized stocks to trade on authorized exchanges, which could open the door to a hybrid market where Wall Street and crypto exchanges operate side by side. This transformation isn't limited to the United States. Globally, banks are adopting blockchain like never before. Qatar National Bank just integrated Connexus, JPE Morgan's platform, to process international payments in a matter of minutes, something that used to take days. This private infrastructure already moves $3 billion a day. And while that's still far from traditional volumes, it shows how banking is beginning to migrate critical operations onto blockchain. In parallel, Chainlink led one of its most ambitious integrations by connecting its technology to Swift's ISO 20022 messages, the standard used by banks worldwide. This means that without changing their systems, financial institutions will be able to execute operations with tokenized funds directly on-chain. It's a huge step, considering assets under management exceed $147 trillion, and part of that capital could shift toward tokenized models in the coming years. And speaking of stablecoins, there is a key move in the private sector. Stripe launched Open Issuance, a tool that will let any company create its own stablecoin in just a few lines of code. The company wants to make it easier to serve a market that's already around $300 billion and, according to Treasury estimates, could grow to $2 trillion in just 3 years. Stripe isn't only targeting global payments, it also plans to plug these stablecoins into AI agents to power new forms of digital commerce. Taken together, we're seeing US regulation, global banking adoption, and private infrastructure solutions converging toward the same destination: a more open, faster, and more digital financial system where blockchain stops being an experiment and becomes the backbone of tomorrow's economy. So, looking long-term, the outlook for the crypto ecosystem and for Bitcoin's price is clearly very positive. And now, focusing on the short to medium term, net flows into Ethereum are strongly positive this week. In other words, there's heavy long positioning coming into ETH. That's what the on-chain data is telling us. Not to mention, corporate reserves of Ethereum keep climbing. Notice how since mid-July, the reserves held by companies using Ethereum as treasury have been growing and expanding their positions. That points to a positive long-term outlook for ETH's price. Otherwise, you wouldn't see multi-million-dollar companies putting so many millions, sometimes all or part of their treasury, into a crypto asset. In this case, Ethereum. And you'll remember, we've been talking about ETH's positive trend for a while now. The dig rally Ethereum has shown since early April reached an impressive 247% move. And trust me, that's no small feat. That said, a lot of people have been spooked, which is normal. We went through a distributive phase in ETH's price, as you can see, which led to a sharp downward dump in just 12 days.
Now, look at what institutions leaned on to kick off this bullish reversal we're seeing after ETH's nasty drop. Even though we've been dealing with a broader distribution distribution in Ethereum, it doesn't rule out that institutions also played a smaller redistributive process inside that larger distribution. Institutions really chose to use the institutional target of that redistribution. That's why after a black swan move, we saw Ethereum's price driven exactly down to the millimeter into that institutional target. From that redistributive phase and triggered by that move, we're now seeing a V-shaped recovery. You'll remember that at that moment, MicroStrategy was also warning it might be bottoming since we were speculating around a macro defense zone. And since a picture is worth 1,000 words, I'm pointing to this massive defense area you're seeing now. It's obvious in hindsight, but believe me, it wasn't obvious before we had that touch. This is where we speculated we could see a macro level recovery in crypto. Of course, if they had wanted to, crypto could have thrown a bigger scare before continuing its path, but it was a key point, an inflection point, and we're seeing ETH's net spot change growing. We're also seeing corporate Ethereum reserves continue to rise. We're seeing Bitcoin's proxy, Ethereum, and the broader crypto market follow a sequence: impulse, then a channel, then a range, and finally a climactic move into a key structure. Our take is that this setup points to a reversal. That's why we've been saying for weeks that we're optimistic, positive on the crypto ecosystem. So, what's Ethereum's job now? After hitting the institutional target of this redistribution phase, we want to see a clean, convincing break and hold above the structure it's already started to reclaim. In plain terms, ETH can keep climbing, and if it tries to break back below that level, the attempt should fail and the uptrend should continue. This becomes a major signal for the entire crypto market. As long as we stay above that structure without losing it, we can remain constructive on crypto. Now, what does this mean for Bitcoin? After creating a trap, which we warned about in earlier Crypto Insight videos, we're treating it as exactly that, a market trap. So, was the market going to rise? Yes, because we were at a great market extreme and MicroStrategy helped us read it the same way. We've seen them break an advanced trend line, and now they're trying to clear a larger creek. In fact, they've already done it. And now, just like with Ethereum, but within a different structure, I'm going to explain why breaking or failing at this level matters and how we can study it. Before we continue, a quick reminder.
I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. I'm leaving you the BitUnix promo details and the Crypto Insight Premium Access form in the description and pinned comment of this video.
As I was saying, with Bitcoin, breaking above this structure is key since, as I showed you earlier, we're optimistic about the crypto ecosystem in the medium and long term. So, as long as we can hold above $117,306, we can only stay bullish on crypto. Sure, at some point they could create a liquidity grab before continuing, but without a doubt, the real battle is going to be around this structure. Remember what we said with Ethereum. Staying above that structure is crucial. It would invite a truly bullish stance on the entire crypto market. We're seeing XRP smash advanced trend lines and then go on to threaten a larger creek that, if broken, could deliver a big upside reward. And as you can see, we're breaking key structures, just like Solana, taking out creeks with strength and conviction. All this is happening at a time when every investor and trader was bearish and negative because, let's be honest, these drops are scary for investors. We're seeing BNB break a key level. Look how it's pushing through this structure. This probably sets us up to take out all-time highs. And here are our friends at Link testing the limit of limits. Check what they pulled off. After the bearish impulse, they built a channel, then a range. Kind of lopsided, but it's there. Then came the climactic action. And when I say they were sneaky, I mean it. Right after that climax, they set a trap on the very same spot and used it to accumulate. It's dirty, no doubt. But the bottom line is we've had a bullish accumulation that pierced a key structure to the upside. XLM likely did the same. It pushed through the creek of an advanced trend line and is now threatening to break a larger structure. The sky isn't won yet. Nothing's guaranteed, but we do know what it's up against. It would be great to see XLM detach bullishly from this structure, though that will depend on what the entire crypto ecosystem decides to do. And here you can see SUI, which also broke a creek, shattering a truly key structure, a real black swan, and from there we're stepping into an uptrend. Not to mention the open book that that is total. And even if it looks like the same chart, this one is total 2. And although it might again look identical and you may think I'm pulling your leg, this is total 3. You can see how crypto looks and why we're positive on the ecosystem for the mid and long term. And if you want to know what we think about the short term, you already know. Join our free private community, Crypto Insight Premium, where we go live almost daily to hunt for the best short-term trading opportunities. Now it's your turn. Tell me what you think about the financial markets and this video. Drop your thoughts in the comments. And if you found this advanced technical analysis useful, give the video a like, subscribe to the channel, and hit the bell so YouTube lets you know about future uploads. Best of luck with your investments, and see you next time.